The three other founders of Shiwara, they are going into a big challenge, having the money from the diaspora in a fund and investing in Africa, and we will see how you will do it. Just next to me, it's Sidiki Traoré. Sidiki Traoré is a young Malian diaspora living in France. Maybe, for me, I would say some kind of next generation of the diaspora. He went with FADEV, FADEV, which is a cooperative, a French cooperative, investing already in Africa for about 10 years, and he managed to make FADEV being interested in the diaspora and how they could bring the diaspora with us to invest in Africa. And they design a new model they call Yirimali. So the groups of diaspora investors could put their money in SMEs in Mali. And he will present it just after. On my left, here is Quentin. Quentin, he's, let's say, the one who have the most knowledge about investment in Africa. He was a banker, he was an investor, he knows about guarantee in Africa, and for 6 years now, I think, he creates his own cabinets to onboard investors in the agro-food value chain all around Africa. And he will be like our witness, knowing very well capital investment, and he will give us advice about how this young solution for diaspora could emerge in the African ecosystem. And finally, we have Jonas here. Maybe you already know him a bit, because he was on a panel yesterday. He is the founder of Pangea, Pangea Trust, and Pangea Incubator. Accelerator, sorry. Very interested in SMEs in Africa. He went back from Europe to be this supportive organization for the SMEs in Africa, and he, by his own, I would say, he first gets to the African diaspora to make them invest in SMEs, transforming SMEs, innovative SMEs in Africa, and he managed to get the interest from the Swedish cooperation to get on a, let's say, move to a non-profit model of investing and to onboard the diaspora much more now. And he will tell us about this, let's say, English-speaking view of getting the diaspora investing in Africa. And after this presentation, I will leave the floor first to Quentin, if you mind, because as a long-time observer of investment in Africa, I would like you to explain us what is really capital investment first, and then what is capital investment in Africa now.
Thank you very much, Guillaume. I'm honored to be part of this panel. As you mentioned, my name is Quentin Rukingama. I'm from Burundi. I'm one of the co-founders of JBQ Africa, basically, which is trying to transform the landscape of Africa in a way that we can not only be in a position to feed ourselves, but to feed the rest of the world. So getting into the topic, so the first element is probably to understand what kind of players do we have in Africa when it comes to the investment space, right? There is investment and financing. To simplify it, financing is anything related to debt. Investment is anything related to equity. So basically taking share into companies by putting money in those companies, right? and becoming a shareholder. So in the investment space, I'll say the big players, I'll say it's private equity firms on one side and venture capital firms, right, if I need to simplify it. And the difference is that the private equity firms do invest in companies which are big enough and generate already profits, right? And they want to invest in those companies in a way that they can help them to go into the next level of growth, either through a new vertical into the business or a new geography, right? And on the other side, we have venture capitalists. Those are the ones actually taking the biggest chance into companies, because those companies are called startup and very early stage, and there are different phases. I'll not get into the nitty-gritty, but literally they get into the business most of the time when basically there is a value proposition and the company can prove that they can sell the solution into the market. So those companies are usually, or startups are usually not profit-making, they're making losses, and they need that support now to scale whatever they're doing to a model which can be profitable. And that's when now the venture capitalists will leave the place now to the next round of investors who are called private equity players. For when it comes to Africa, so those two players are existing in the continent, but predominantly we have private equity players, right? Because it's a new geography, that venture capital or VC model came from the Western world, where the ecosystem is pretty much structured, developed, now looking to the next level of companies or startups, which now can bring new changes into the market. So in Africa, the first players who came, let's say 20 to 30 years ago, were private equity players, right? Because it's easier to do an investment in a company which is already structured. We can see the profits, we can see the size, now to bring it now to the next level in terms of new vertical or new geography. So VC capital, as you can imagine now, with all the descriptions, fairly, I would say highly risky. So it's a new space which has been filled in the last years by, I'll say, donors, because we don't have a lot of VC players on the continent, right? And it's very risky, very unstructured market. So basically donors coming with grants, technical assistance, and few individuals have taken the chance to put their money into the VC model, right? It's a fairly new space, which we'll probably be exploring now in the space of remittances, diaspora money, getting into the continent. I hope I have answered your question.
Thank you. Thank you very much. I think we now all know the difference between the two sorts of capital investment model, and we can now go deeper in knowing about the model our speakers are about to develop. Maybe I will give the floor to Alima to present Shiwara Capital.
Thank you very much, Guillaume. Good evening, everyone. Very honored to be in this panel with Jonas, Quentin, and Sidiki. Maybe to briefly present Shiwara Capital. Shiwara has been created last year by 4 diaspora investors from finance and entrepreneurship landscape, basically. We're based in France, and our objective is to finance SMEs and startups in Africa. Our geographies covers first Mali, of course, because the founders are originally from Mali, for 3 of them, and the 4th one is from Guinea, but we also expect to have a Pan-African coverage, starting with Senegal this year, hoping to expand in Ivory Coast, depending on our development roadmap next year, and before expanding also to the other area of sub-Saharan Africa. We mainly focus on 3 sectors: agriculture, finance, and energy, because the founders actually have proven expertise and background on those industries, more than 15 years in finance and consulting and agricultural projects, basically. And so we have also support from IFAD, for financial support. This is really important, I think, for the rest of the question that we will be talking about today. And also we have a partnership with an impact investment fund, which is INP. So this is it. Thank you.
Thank you, Halima. I now give the floor to Sidiki to present us the new solution, Yirimali from FADEV.
Hello, everyone, and thanks everyone that's listening to this panel. I am Sidiki, and I'm going to tell you more about Yirimali. That's held by FADEV, which is a cooperative investment company who has been working in West Africa since 17 years by supporting strategically small businesses and also investing in them financially. So through Yirimali, FADEV is giving the opportunity to the diaspora to partner them together and then join FADEV to invest and support those businesses in West Africa. So precisely in Mali, in the case of this project. So the investor club will all have autonomy in terms of legal aspect, and also have autonomy in terms of management, because they are like an entity working by themselves, and choosing also the company in which they want to invest their money in. So they have this direct link with the business owner that we try to offer them, so that they can be with the business owner in all of the cycle of the investment stage. So they will have the opportunity also to support the business owner with their knowledge, or even more than the financial aspect. And also the most thing that I mean the diaspora are interested in is like more the social impact that they have after they invest in a business, because after the return, the financial return on investments, they are also interested a lot about the tremendous social benefits that come from it in terms of employment, because the businesses by growing employ people, and also in terms of food security, as we mostly choose businesses from the agribusiness sector. Thank you.
Thank you, Sidiki. Very clear. I now go with Jonas to present us the solution of Pangea.
Thank you so much. Pleasure to be in this panel. My journey started from the private sector, as a little bit as the GM said. It started in 2018, or actually 2017 when we structured it, where we were looking into how do we start investing into technology businesses, growth businesses on the African continent. So we are what you would call like an accelerator startup fund, basically. So we are, you have the private equity, you have the VCs, and now you have the startup acceleration type model. So that's what we are. And after working with the diaspora and mobilizing and really getting things happening, that's when we got approached by the Swedish Development Agency and asked us if we could create a non-profit that just specialized on diaspora, and that's what we did, and that became Pangea Trust. So the model is fairly simple of what we're doing. We develop solutions for the diaspora by the diaspora. Why? Because we believe that there's a big need for other financial solutions out there than what currently existing. Usually what I tell people is it's like you go to a restaurant and you have one dish on the menu. You can order the fish dish. But what if you don't like fish? What if you want vegan, vegetarian? What if you want Thai, Italian, whatever? So with one dish on the menu, then clearly not so many people will come to the restaurant. But if we can expand the menu and make it more attractive, a lot more people will be coming. So why am I saying this? Because we're in the business of growing remittances. Obviously, we look at status quo and we're trying to understand how is remittances being utilized today. But the factor we look most at is what is the current appetite? What is it that the diaspora would like to do, but nobody's enabling them to do so, basically. So we've been developing everything from crowdfunding platforms, or investment-based crowdfunding platform, Sharia-approved product, and we're also working on different kind of different types of fund structures, basically. So we see ourselves as a, I don't know, like an innovation lab for the diaspora, and developing solutions that can have a catalytic effect and growing remittances, because that's what we want to do. And we love collaborating with organizations. So if anybody is interested in collaborating with Pangea Trust on this mission, just reach out to me. Thank you.
Thank you, Jonas, for this brief presentation. Listening to all of you, I can see that for all this vehicle, we are now facing a partnership between impact investors, like Pangea, like FADEV, or like IEP, and diaspora investors. My question will be, what are the shared motivation behind this new partnership in your model? Sidiki, could you tell us about FADEV and these diaspora investors? Why this partnership?
Okay, so from FADEV part of view, it's like we were willing to open our capital to more investors. So the diaspora was, I mean, a good target for that. So in terms of diaspora view, because I am also from the diaspora investors are interested in the social benefit that they have from their investment. So, and FADEV has always been working, I mean, since the beginning, and their DNA is also that, the social benefit from investment that they're doing. So other than the return on investment. So that's where we came to a common point with the diaspora. So, and then the engagement of, we have also noticed that the engagement of the diaspora refers to the memory of the earth. So that's why we developed here in Mali to give them a solution that can be like a bridge between their heart and their home country. So the, I mean, the social benefits and the impact investment is really in the center of our investment.
Thank you. I like this expression, the link between the heart and the home country. Thank you. Halima, what about you and the link you have with investor and investisseurs et partenaires, this French organization?
I think actually, generally speaking, when we talk about African investing, we know that we always end up with impact. You know, structurally, when you invest in Africa, you're looking for somehow some impact, whether it is job creation or for social. The question is, it is an initial attention or not. And I think, therefore, impact investment fund and basically Chiwara or any private equity company, we're all going in the same direction. Maybe what is new with diaspora investor is that we have a new generation of diaspora, not only people originally from Africa, but also descendants of diaspora investor, diaspora people. And we also have other people like Friends of Africa. So we see the diaspora investor population not from an exclusive perspective, so from a broader, really, perspective. And for that, those people are keen, of course, to engage in Africa. They want to be part of the new opportunities that are going on in Africa. So they want to take place with Africa and take some part in it. Maybe what is also new with this generation is that they're kind of a bit tired to be considered only from an ATM perspective. So I'm being a bit provocative here because I know we've talked about a lot of remittances, but basically what they want to know, if they bring some money on the table, what they can get back. So this is where maybe the positioning of Chiwara is important for the diaspora investor that we talk to. They're not only looking for impact, but also return on investment. So that being said, basically, Chiwara has been set up by a partnership with IEP, which is really important because they provide us technical support. We also have some support for AFAR, which we really appreciate, because being in a cross-border situation, we need some local actor to accompany us in having expertise from local context, but also some know-how, and also to help us identify quality opportunities, and maybe after the investment, some monitoring support. So this is where I think Chiwara is a really good example of any partnership that we can have between private equity, if we want to say, or any impact investment fund, and I think we can expect maybe in the future to see partnership like that, because it will help foster the African private capital markets.
Thank you. Can I ask you maybe to go deeper in your relationship with Zira Capital?
Oh, of course. Sure. Okay, as I said, we have a technical support from IEP. They assist us since the beginning to create Chiwara Capital. And they also have a local investment fund, which is called Zira Capital. And we are really involved in Zira Capital because we have invested in Zira. And the partnership agreement is that we provide some funding to Zira, and in exchange, Zira Capital help us select the quality project that we are looking for in Mali, for instance, and also assistance to monitor those companies locally. So this is where I see like those actors are really important for diaspora investors, because we need close relationship to monitor the company in which we invest and to be able to provide interesting and transparent reporting to our investors.
Very interesting. Thank you very much. Having the support of a local investment fund, I can imagine it helps a lot. Thank you very much for this. I will go with Jonas. What about, how do you see the motivation, the shared motivation from impact investors and diaspora investors in your situation?
Absolutely, thank you for that. When we did our first investment vehicle, we did investor training, and we had both diaspora investors. This was in the Nordics. Half of them were diaspora investors, the other half was Nordic impact investors. And the reason we did it was because the impact investors didn't know much about the African continent or the market context, which the diaspora did. But then many in the diaspora has never invested into technology companies or done a proper due diligence, etc. So it was a really interesting merging competences, but also learnings. And we also saw that a lot of them became good friends afterwards. But in terms of shared value, I mean, they were very aligned. And the whole principle behind impact investing is literally like, you want to invest in, what's good for the planet or people. That's it. Society or climate, right? But you're still expecting a return of investment. And the whole philosophy around why is impact investment good and why does it make sense? It's basically saying that we as consumers, we don't want to support companies that are doing bad in society. And more consumers are becoming conscious consumers and picking the options that are providing, social benefits for the local community or environment, and that in 10 years' time, 20 years' time, there will be only more and more impact-type organizations. So saying that being good for people and planet is the winning recipe, and saying that these are the businesses that will be most successful, this is how you also align with, from a capital standpoint. So it's not like philanthropic and just saying we're just going to invest in them and they do good for children or agriculture and stuff. It's also because you believe that companies that are focusing on impact will be more competitive and more successful on the marketplace, hence be worth more money than businesses that are not focusing on it. And then in terms of the diaspora, we've done mapping studies where we interviewed hundreds of people from the diaspora in Ethiopia, Kenya, and Somalia, and we see it very clearly there. We haven't interviewed a single diaspora group or community that says that impact is not a priority. All of them basically say that. They don't want to invest into a case back home that has a negative effect on society or have a negative effect on environment. So I think that's also, that makes them impact investors per se. Thank you.
yeah, you bring them in the impact investment ecosystem. Thank you for this presentation. I will now go with Quentin, which is also a great observer of the African social transformation. And I would like to have his analysis about this raising interest of diaspora for capital investment and impact investment in Africa.
Thank you very much. I just want to check in the room. How many people are from the diaspora? If you can raise your hand, just to check. All right, fantastic. I'm going to ask a question. If you are the second generation of the diaspora, right, what has been different vis-à-vis the first generation of the diaspora in terms of sending money home? I'm going to answer my question, but I will just cross-check with you guys by raising your hand. Is the first generation of diaspora probably the age of my parents, right, in the 60s, 70s, 80s? When they're sending money back into Africa, was it for investment or to support the family? For those ones who are for supporting the family, first generation, can you raise your hand? All right. I don't even need to ask my second question. So that's now basically how the money has been transitioning, right? The initial generation, basically in the 60s, 70s, 80s, they were sending money home to support their parents, their siblings, right? The nieces and nephews who are still back home, right? That's the grant kind of support Jonas was mentioning. Now we are in a new setup, right? And that's what basically Alima was referring to, Jonas. That we want to make money. We are from the diaspora, we want to make money and have an impact. And not because of charity purpose, when it comes to the impact Jonas mentioned, but literally, how can I make a sustainable investment, right? I still want to be on this earth, and I still want to live with people in a nice way, right? So that's the people and the planet Jonas was referring to. So it has been very interesting to see that transition. We are in the formative years of that kind of new investment. The whole question now, how do we structure it in a proper way? So I'm very excited to see that there are different models, which has been presented by Sidiki, Alima, Jonas, and others. We have mainly two issues in that setup of investment. On one side, you need to gather little money from many people, right? Somebody will put 1,000 here, 2,000, 5,000. You will rarely see an investor bringing, an individual investor bringing $100,000, $1 million on the table. So that's the first thing. So retail kind of investment. It comes with challenges in terms of how do I collect that money, how do I group that money, how do I invest that money. Now on the other side, we have kind of a disintegrated kind of landscape needing money, right? The big corporates in Africa, they don't have any issue to have money. They'll go to the bank will be actually on their knees to give them money. Or they will have fantastic partnerships with international global corporates who will be happy to put money in those companies. And actually, those international corporates listed in the New York Stock Exchange, London, Singapore, will be fighting to get into those African companies because they're the happy few. Now we have the missing middle, the SMEs struggling. And if those ones are struggling, now you can imagine now the startups struggling. So now the room for investment which is on the continent is mainly towards the SMEs and the startups. So from my early discussions, you can see that that's the more complicated setup, right? So I'm just sharing that food for thoughts to keep thinking, what can we do? And we'll discuss about it probably later on. Over to you.
Thank you, Quentin. Yeah, the question was about this next generation raising, and you get into it precisely. Thank you for that. I will now turn to Alima to know if it's just a question of generation, because I know, Shiwara, you have made several surveys about finding the segmentation of the diaspora which can goes with Shiwara model. Can you tell us a bit more how you're engaging new diaspora and which is the segment you want to go with from the diaspora?
At Shiwara Capital, actually, our target segment are, first of all, professional diaspora people. When I say that, I mean basically people who are financially literate enough to engage in investment. And it's important to note because really the investment mindset is not well developed, unfortunately, among diaspora people from a broader perspective. So at Shiwara, we have performed through some survey to see how people would like to engage in investment in Africa. And it turns out that most of the time, the investment culture is not really strong. So we even narrow our focus because when we talk about investment, we talk about risk, right? So the investor need to understand where they put their money in because they can lose everything. So we narrowed the focus on those professional people who are financially literate enough to understand the investment and the risk related to those investments. And basically we're talking about people with intermediary revenue between medium and high, and who also can bring something else than financing, because our objective is not only to fund the company, it's also to bring some assistance from strategic and from international standards perspective to bring some value to the portfolio company that we will be investing in. I think this is really where we had a really sustainable value in our investment. So we're talking about probably 100,000 of people that we will be targeting toward this, and this is where we focus our investment strategy.
Thank you, very clear. Can you tell us about the ticket for the diaspora to enter Shiwara if it's not...
Actually, as Quentin said, we're basically targeting retail investor, because we believe that given the nascent African investment market, private equity traditional tickets are too high. It will be 100,000 euros. This is too high to engage in investment and maybe reach the wide range of population that we would like to. So we have fixed our entry ticket to around 5,000 euros, which correspond to the intermediary and high revenue people that will try to reach.
Thank you, very, very interesting. I now go with Sidiki to know more about the diaspora segmentation they have made with FADEV to find these members of the diaspora club of investors.
Okay, so unlike remittances, investing is like giving several times, but both are rely. Because remittances is related to the diaspora. So that was being to say that our model is targeting all the diasporas. All the diaspora that are willing to do productive investments and partner together in Mali. So this is targeting all of them. Because partnering together, that's important. Why? Because, I mean, alone you can go quicker, but together you surely will go farther. Like if I decide to, to run to the door, I mean, I might go quicker. But if everyone here in this room helps me to go there, I think that I will even go behind the door. So that was being to say that we don't have no limitation in the segmentation of our diaspora. We are targeting every single person in the diaspora because, like, for an example, like let's say that everyone in this room is like from the diaspora. So the lovely people on my right side decide to be an investor club, and then they decided to, they are limited to 20 people, and they decide to, to support and invest in one business in Mali. So let's say that the first person, he is doing pretty well in his life, so he can put like a ticket of $5,000. So I mean, it's nothing to him. But there is another person who, I mean, is not doing that bad, but he can only afford like €1,000. So, I mean, both of them can invest in Year Mali because there is no minimum of tickets. And then also, I mean, what to be saying is that we only have, because of some regulation matters in France, we are limited to 20 people per investor club, but with no limited amount of money to invest in. But this will also bring us to some, I mean, to some financial and taxes problem that we try to avoid. But we are not segmenting the diaspora in terms of that. But like an interesting fact that that we are living now is that the person we have more facility to get into our project is like the young working diasporas who maybe because they have much more financial education, don't know exactly, but these are the people that we have more facilitating to get them into the project.
Thank you, Sidiki, and I'll go to Jonas. Jonas, you were telling me yesterday, preparing this session, that relating to your experience with the diaspora, you have designed a full bench of diaspora investors personas. You know, and I know there are, we can have it for free on your website, and thank you for that, because they are really amazing. I'd like to know, when you listen to Sidiki and Alima, can you say that the personas they are talking about are the same you design with Pangea?
Absolutely. Thank you for that question. And for everybody here, if you go into the diasporalab.com, you can find a lot of like mapping studies, the tech specs and persona analysis, like everything we basically do on the diaspora thematic area. We basically share it there as a public good. And to answer your question, yes, I recognize what they're saying. I think we have, you know, saying young professionals. For us, we have a category or a persona. We call him Robert. We have different like guy names and women names, just so you know. But yeah, I think for us in Pangea Trust Word, that would be the Robert. The one we focus most on in Pangea Trust is what we name our persona is Mbeke. Mbeke is about 45 years old or more, has 2 children, lives in a house, has it paid off, already does investment back home, came as a refugee in their like early teenage years, for example. And then we also map out like what are the key drivers, the key needs, etc. So the whole point of a persona is really to create like a profile, I guess, of what are the common denominators to represent a subgroup. Benefit with that is that you know who you want to speak with, because it's not easy to onboard diaspora to invest, you know, and specifically if it's startups and SME. I mean, forget about it. Like, I remember like the first time we fundraised around it and people were like, okay, it sounds like a great thing, but what do you know about finding amazing opportunities on the ground? You know, or how are you going to be doing the capacity building? Because if you think just providing money to startups and SMEs will like solve it, forget about it. You're going to need a lot of capacity building, a lot of it. We personally we've done about 350 startups just through our accelerator program. So we do a lot of accelerator program to not only like select who are the best businesses, but also to help them improve, right? Then once you have invested in them, do you think you stop helping them? Nope. They're going to need capacity building support and a little bit hand-holding for a while. The way that we structured it is that investors that were participating in some of our funds are also what we call active investors, meaning that they are part of the post-investment program and also have to report back. But I'm just explaining, it's not a simple thing to jump into and then just say. So the money is one thing, capacity is another thing that really needs to follow, and do not underestimate that factor. And then I think for us, just to be fully transparent, is like we don't look at it as like we have figured everything out. We are on a journey here where we are, our only focus is like how do we become better? What is the next element? How do we become better at risk mitigation? How do we become better at, for example, risk mitigation by co-investing with local angel investors? That's something we've been doing in our past investment. Why does that make sense? When you have people in the Nordic, US, Europe, and they're going to put in money, but none of them are in Kenya, why not co-invest with Kenyan business angel networks? I mean, they're here. They know the market. They can be door openers. They're perfect bullshit filter. So like really looking into becoming more resource smart is what we're focusing on. And again, like as of now, we focus both on the diaspora profiles, but again, it's the same thing also looking into how do we now combine the diaspora with local angel investors and even first loss facilities or guarantee funds. I mean, there's a whole ecosystem out there. So I feel like it all comes down to like how do you combine those things to create like a really nice ecosystem that makes it safe for investors and diaspora investors to invest. And nobody wants to promote like come and invest in Africa and then diaspora is with us and then we do bad investments and then everybody that put in money never want to invest back home again. That's like the worst situation. Yeah, I just want to make that clear. So we want like not irresponsible investment, responsible investment. So every person that invests becomes an ambassador and more people invest. Thank you.
Thank you to the four of you for this like very detailed big picture about capital investment and impact investment for the diaspora and how it is going on right now. We are now quite at the end of this panel, but before leaving, I'd like to know more about you and the upcoming challenges and how to scale up your model. I'm sure you have plenty important things to tell us. I will go with, let's say, Alima first. I know you've got a plan for Chihuahua. Can you tell us?
Yeah, thank you. We hope to deliver on those plans, basically. Actually, in France, I think the most important challenge that we're facing right now is probably regulatory constraint. It's important to highlight that. This is why we actually design a roadmap on two main phases. The first one is already ongoing, and we have started investing in Mali, as I say. By the end of the year, we expect to have some deal opportunities in Senegal by co-investment, as Jonas was talking about this fact. I think this is really important for us, basically, to have a bit of insight or local ecosystem and to onboard on each country in which we will be investing in the future. And by 2024, we expect to expand in Ivory Coast, so other countries in Western Africa, and before also going further in the rest of Sub-Saharan Africa. To that, we expect to raise around 2 million euros to invest in the companies. And I think our challenge will be to deliver a solid track record, first of all, on these objectives. And for that, as I was saying, regulatory constraint is a big challenge because Europe is a very regulated market, not only from KYC and AML perspective. We were talking about this earlier today, but we also have other rules such as investor protection rules, which is really a good thing. Basically, it's really a good thing because we have some rules that frame maybe investor investment, but on the other hand, it's really costly. It's costly to implement our model. It's costly to reach a wider range of investors that we expect. So this is why we have, I think, appreciate the financing support that we had from IFAD. So this is a challenge for sure. The second challenge probably will be twofold mainly. It's from one hand from SMEs perspective, because we know that SMEs in Africa need a lot of assistance, and sometimes they are not always ready to be invested. So we expect maybe DFIs or other international organizations to maybe put more money in helping SMEs and startups to structure better their governance framework, their model, in order to be able to receive investor funds. And we also see another challenge from maybe investor perspective. As I was saying, basically Francophone diaspora investors are much more risk-averse than Anglo-Saxon one. We also talk about this earlier today, and we see this as another challenge, so we need maybe a bit of awareness support on the investment to mobilize a wider range of investors, and we expect at Chiwara Capital that we will be able to mobilize and bring additional investors in order to scale up on the two main phases that we're seeing. The first one being raising about 2 million euros, and by 2025 we expect to be really in an investment fund structure and to go up to 50 million euros and invest across Africa. Thank you.
Thank you. So you will go with the Malian diaspora from the US to invest?
Not at all. This is another topic, of course. US investors are complicated from regulatory and tax perspective. So our objective is not to go to the US first, but we expect maybe to onboard other European diaspora investors first, and then we will see if we have the necessary capacity to expand and talk to US investors.
Thank you. And I go with Sidiki and Yiri Mali. What are the challenges?
Okay, so the challenges for Yiri Mali is like the general situation of Mali. We're not gonna lie, a lot of things are going on, and I mean it slows down everything. So a deep breath. That's what all the politics needs to take, like to let us, the population, work for our country and for the world, because it's slowing down everything, and then nothing can be possible with these kind of situations. Other than that, for Yiri Mali, we need to, to have more relevant and recurrent communication about our success, because we managed to create some investor club already. So to communicate more about them, why do those people want to partner together to invest in Mali, why in this specific business, and also to show more videos and pictures about the businesses themselves, so that people can see that there is a lot of potential in this country, but we just need a peace, political and security atmosphere to work. And that's what I always like to say. I mean, the hardest part of the thing, we'll do it now. Only the impossible will take a little bit much more of time. Thank you.
Thank you, Sidiki. And we hope the situation will get better in Mali, of course. Now I turn to Jonas. What about Pangea? We heard about Chiwara with a for-profit model, I think, and we see that they want to quickly onboard diaspora and money from the diaspora to invest, so to be sustainable. What about your non-profit model, and how can it goes on, this model?
Good question. Yes, as I mentioned before, I'm a private sector guy, so I've been creating over 10 companies. I've been an angel investor for the past 15 years and done a lot of different things. Non-profit is something I ventured into in 2019, so I'm pretty new on that space, and it's much easier to have to build like a business model as a for-profit than it is as a non-profit, to say like that. The way we work today is that, I mean, as Pangea Trust, we work with partners such as Microsoft, SIDA is one, GIZ is another one. We work, I think, with like 10 or 15 different development players. Also South Korea, Japan, and name it. So in the past 3 years, I've actually become pretty good in the non-profit. I think I speak pretty fluent non-profit now, and we also collaborate with many UN systems. The biggest challenge for me is running, is like, if you look at Pangea Trust, is actually like, it's not necessarily the business model aspect of it, because you can always, create for-profit entities and figure that out. I think the biggest challenge we're experiencing is probably, we're very keen on collaborating with banks, and specifically big banks. And one of my absolute biggest issues is, how do you get a big bank to understand, to want to drive innovation, basically? Because they're all occupied on the diaspora market, and they look at, they earn commission from diaspora accounts. So diaspora is good, you know what I mean? In Kenya, it's $4 billion, it's 4 million people, good money. But why change something that is not broken, right? Why change something that's already good? So why would you want to disrupt your own market? Why would a bank want to develop solutions that are not out there today, but that could be popular? And what we see, the reason we want that is because the biggest challenges are regulatory aspects, the cost. It's a lot of work, you need to do it. But if you're a bank, you kind of already have that infrastructure in place. So the best innovators for the diaspora market are actually the financial players, or if you already are a bank and you already have diaspora accounts, etc. Now the question is, how do you incentivize somebody who's already in a good position to want to do something different? And quarterly reports are more important than winning in 3 years' time. And that's where I'm really struggling, and I think that if banks were more, it was easier to work between, financial solutions and banks, it could truly transform the diaspora market, because we would get rid of a lot of these regulatory headaches and efforts, and just the amount of money and time that just wasted on regulatory stuff is like, for a bank, abracadabra, gone.
Yeah, you have to create your own bank, Jonas, I think. Thank you for this. And now I go with our big witness of this panel, Quentin. To your point of view, having listening to the challenges, the three model here, the three vehicle we have here on the panel present, to your point of view, looking in the future of the ecosystem, very well, what could be your advice for them, and what challenges you see for them coming?
Thank you very much, Guillaume. I will probably tap into the experience of my company, JBQ Africa. We've been working in the space for the last 5 years and got the blessings to work with three kind of, I would say, institutions. The first one is the development partners, right, or countries. We've been serving notably the UK government, the German government, but also local governments, notably in Southern Africa, Malawi, Zambia, Mozambique. On the other side, we've been also working with financial institutions. We've been supporting development finance institutions like World Bank IFC, No Fund, also local institutions like Trade Development Bank and the rest. And the last family of institutions we've been working with are corporates and SMEs. We've been working with the likes of Safaricom. We've been working with global corporates like Golden Agri Resources. Coming back to Jonas, we are fairly fluent with the three kind of categories, meaning development partners, financial institutions, corporates, and SMEs. Now, coming back to each and every issue which has been raised, I will probably start with Alima when it comes to the regulatory framework. I guess for a French, English, and Kirundi-speaking person, it sounds Chinese sometimes when it comes to the regulatory environment. However, I will not go and reinvent the wheel. When it comes to investing outside of Europe, we've seen a lot of funds setting up in Liechtenstein, right? Probably France will not be the right place. Exploring Liechtenstein could be an option. If you want to come closer to Africa, Mauritius is another gate to explore. So I'm being told here by Jonas, Rwanda, it's even close to your country. Yes, yes, it's definitely a country to explore. Probably that will ease the process, especially when it comes to those countries which have already experienced to invest outside, and notably in Africa. When it comes to the risk appetite, that's a very interesting one, right? I like the profiling done by Pangea Trust. And it's literally, if for instance you want to invest, the first thing through your bank, the bank will give you different questions to fill so that they can judge your level of financial literacy and your risk appetite. And that is a must-do, right? So that's definitely a must-do. Now the question is, when you know all of that, how do you structure it? From my humble point of view, it's better to have different options. I like the idea of the menu in the restaurant because I'm a foodie. I love food. Some ugali here, some injera here, and the rest. So we need to be in a position to offer the diaspora different plates. From the most accessible one, meaning the less risky ones, let's say Eurobonds, to finance infrastructure in Africa, right? Having that first option. For those ones who have slightly more level of appetite, can we invest in corporates through the stock exchanges on the continent, right? You'll bring even more liquidity in those stock exchanges, the Nairobi Stock Exchange, the West African Francophone Stock Exchange, the Johannesburg Stock Exchange, and the rest. And the last category, the riskiest now, is now the SMEs and the venture capitalists. I know it's close to Guillaume's heart. So it's just need now is structuring, right? And the question is, remember the first thing I raised earlier on, having two headaches, as Guillaume will say. You have the headache of dealing with retailing investment on one side, and the headache of dealing with retail investees, meaning those startups and the rest. Please don't take both headaches. Right? One is enough. So what I would suggest, if there is a good appetite to invest in venture capital, is to change that money of diaspora into fund of funds, right? Create that fund now which can now feed into VC other players. So remove that headache from you, get the money, invest in people who have been doing it for a while, and now I think it's a good transition to the other point which was raised by Alima again, is in terms of, and Jonas mentioned it, right? Money is good, but you need to have technical assistance support for those different players in the ecosystem. So dealing now with the development partners, there's a lot of money, and I'm getting closer to Guillaume here when it comes to IFAD. They've been really involved in different initiatives. IFAD has notably invested in a fund called ABC Fund, specialized in ag, so it's close to my heart. Debt financing, because they've realized that banks are not doing a lot of that, and now providing now technical assistance to them. So there is that win-win partnership, right, to make sure that we are moving in one direction, and as a team, as Sadiki will say, we need the three spheres of the society working hand in hand together, right? So that's now basically my feedback on that. Sidiki, I completely agree with you. That's where we should start, good governance. Without good governance, there's nothing which can be done. Is there anybody from the political arena here? They are shy. I can see one who's very courageous. Basically, Sidiki is saying, if you want my money, just give me the space of good governance. And we know our countries have been struggling with Forex, and diaspora can be a good source of money. Right? So if we provide them the right environment, then we can tap into that money. And it will be a win-win from a humble perspective. Jonas, when it comes to the banks, oh my God, I've been working with them. Is there any banker in the room? You see, they're even shy to raise their hands. So, there's one. Oh, madam will come right after you and discuss what can we do together. I've spent a good chunk of my life, probably close to 15 years, working with or within financial institutions, especially banks. The issue is that banks are not the biggest innovators, right? And it's because of the constraints they do have in terms of regulations and the rest. All eyes on them. Probably, and the bigger they are, the more complex they become. Probably the option will be to take tier 2 banks to see they want to join the big family of the tier 1. What can we do to accelerate that growth? Probably through partnerships. Even better, fintech. They have the regulatory approvals. They will be very interested to get more funding and basically playing the liaison between inside and outside Africa. Those might probably be your best partners. Thank you very much.
Thank you, Quentin. Thank you for this word of conclusion, I would say, from the panel. And because we have maybe 5 minutes left, I will go for a bunch of questions from the audience. So if you have still questions for the panelists, goes on. I see two people in front of me, and guy like there. So I will go first with you, then with you, and then with you. So.
Yeah, thanks everybody. Killian from IOM again. I have a question for you guys as investors, and it kind of relates to work we do too, but what's your process for identifying diaspora? Is that process as difficult as it is to identify investment opportunities? And then, how do you engage effectively with them? So, question around identifying diaspora and then around engagement.
Thanks.
Thank you. Listening to Jonas in particular, but addressed to all of you, whoever wishes to take this on, would you encourage, if you were approached by a diaspora organization like ourselves, would you buy into our idea of setting up our own centric fund? And would you be available for the advisory side of structuring it and helping with the fundraise? Or would you be advising us to figure out how we could partner with existing competent, experienced funds that can solve the same problem that we are trying to achieve, unlocking funding from the diaspora of our membership into our local markets? Thank you.
Thanks. And the third question, I see somebody raising. Yeah, it's your turn.
Yes, mine is not a question. It's an observation from yesterday, up-to-date presenters. And it's based on leaving no one behind. So, since I've been listening, I've gone through the program, I've heard many things: remittance, climate change is an opportunity, and all discussion making Sahara investment market, climate adaptation, agriculture information, and so many things. Now I'm worried. There's a constituency that have been left out. I've not heard any of you, all the presenters, talk of people with disability. Or maybe there are not people with disability who are staying in the diaspora. Two, they don't remit anything. Now, within today's presenters, one presenter said, climate change is an opportunity. Another came within the presenters over there said, how many are entrepreneurs? How many are not? But I not hear her ask how many people with disabilities are in the room. So if I may suggest, let it be this way. Disability also means an opportunity, if climate is an opportunity. Thank you.
Thanks for this contribution, and I will leave. No, you won't. Yeah, we can have a third question. In fact, so let's go. Yeah.
Good evening, everyone. My name is Kenneth. I work for a company called Moran Capital here in Kenya. I will be on the supply side of investment opportunities where we work with SMEs here in Kenya requiring investments. So therefore offering the solution to the demand side from the diaspora. So we are able to de-risk fairly reasonably and provide opportunities for private debt and private equity. So Moran Capital, we can have this conversation. So and also to really thank the panelists. The conversation was quite riveting and quite exciting. Thank you.
Thank you very much. So we have just, we can have a third question, I said, so let's go.
Good afternoon. Good evening. Thank you for this opportunity. My name is Mark Thumi. I'm a Kenyan based here in Kenya, and my question would be on the supply side. So we're hearing about all of these investment funds from the diaspora and such, and how they're being directed to Africa. But I'd like to ask a question on the youth perspective, because as most of us understand, most innovation comes from the youth. We are the ones who are driving change mostly. So I'd like to ask, what can we better do as the youth in Africa to position ourselves to qualify for these investments, and where do we fail as the youth in terms of being able to, to reach the standards that are required for these investments? Also, a last quick one would be, how can we as the youth be better facilitated in order to reach those qualifications? Because usually the problem is capital, even when you're looking at compliance. So those would sum up my questions. Thank you.
Thank you very much. So I will now let the panelists answer. Maybe Jonas, you want?
Absolutely. Hi, Killian. Me and Killian sat in the same panel yesterday, so I'll just jump into Killian. Mobilizing diaspora and how to recruit. We do a mix of different things. One is, one layer is looking into already already existing networks of diaspora groups. Some people are involved in that. We look into networks. A lot is network-based, because if you know somebody in the diaspora that is investing, they'll usually know others, etc., etc. And then you can also do, social media targeting based on what are the search items, etc., etc. What we realized is important is that it's always most difficult recruiting the first one, and it's always the easiest recruiting the last one. So the whole fear of missing out, FOMO, really works. Specifically, you can tie it to status of who's most African, or if you're not participating, you're not as African as the other, or you don't care as much. So there's different ways you can work on it, but definitely psychology and fear of missing out sounds ridiculous, but that really work on the diaspora, at least from my experience. Second question regarding if you should set up your own. Should I just jump in? Your own fund or not? Very good question. I think. There's different ways of doing it, because if you have a fund, it really comes down to how are you going to get the deal flow? How are you going to find the best businesses? How do you structure your due diligence process? And once you unlock the funding, how are you the best person or the best system to help this business grow? The higher trajectory they have, the better investment you've done. But if they don't have a good trajectory, it's not a good investment. So I think you need to kind of evaluate it from yourself. I think there are some that should be opening their own if they have a good investment philosophy and a good strategy. But also be aware that there are a lot of other systems out there that you could also collaborate with, like mentioned. So there are, you have ASEC, which is an association for startups, enablers in Kenya. They have 85 members with hubs all over the place, from Eldoret to Kisumu to Nairobi to name it. So there are ways where you can collaborate, and there are some risks that comes with the collaborative model, because then you really need to trust your partners, because you don't want to invest in businesses if you don't know if the due diligence has been done right. Because if somebody takes shortcuts in the early stage, like investigating if this is a financially sound business, but then they didn't do the homework, and now you put in your money, you're going to get punished for that. So if you build a partnership model, really make sure that you have the trust level and the structures in place. That's super, super critical. For the gentleman in the back that was speaking about disability, maybe he left, okay. No, we work on Pangea Accelerator, which is an investment company. We work with Global Disability Innovation Hub and also something called Assistive Tech Africa, which is building a fund to invest into assistive tech startups. So we actively, for the past 2 years, actually 3 years, we actually been working actively towards investing into assistive tech. I just wasn't sure that this was a thematic area to speak about it, but there is representation in that sector. I think that was it. Oh yeah, for young people, very good question. Median age 19, we really need to invest into the youth. For us as Pangea, that's the only reason why we invest in startups and SMEs, because it's youth-dominated sectors. So, you know, you can make more money investing into real estate, or it's considered more safer. There's other ways. But if you really want to impact the youth, you need to invest into, I think, businesses where the youth are the decision makers, which in many cases are startups. There are a few challenges in terms of how you can position yourself. I think, like I mentioned before, there are quite a few incubators, accelerators out there. For us, we are launching a university student venture program. One of the things we're doing is that the first layer, the first investment you get as a business is usually what is categorized as friends, family, fools, all right? Many don't have friends and family that can put in money. So what we're doing with that student venture program is that we are providing financing for the student ventures that is replacing the friends, family, fools. And then come angel investors, and then accelerator fund, and then VCs, and then private equity, just to explain. But as of now, the ecosystem is not fully developed, and the opportunities, considering it's a youth majority continent, the opportunity do not match the need. I mean, it's quite embarrassing if you would ask me. I think it's way too poor performed, and I don't understand why we don't focus more on it. I mean, we say we will, but very little actually happens. So, yeah, if you have any solutions, I'm ready to hear you out later also.
Thank you. Quentin, do you want to jump in some of the question?
Yes. First of all, Kenneth, you have a lot of business around the table. Feel free to liaise with the lady and the two gentlemen. Then when it comes to, I think there are 2 points which my answer will be the same. The one related to setting up your own fund, right? And the young gentleman thinking about how should I position myself to be ticking all the boxes of the different investors. Partnership, that's my answer, right? Partnership, I truly agree with what Jonas has mentioned when it comes to setting up. Probably no need to reinvent the wheel. It's look around who has been successful in doing so, and check the track record and do due diligence. By the way, due diligence is just an audit, right? It's auditing the processes, the people, and the rest. Because at the end of the day, we invest in people, right? We invest in people before you invest in projects. Because in Africa, you have the pleasure to have 3 kinds of financials. One for the tax and basically the government, one for the financier, and the one for yourself. Now, if you're an investor, you'll be wondering, which one have I received? So the best way to mitigate all of that is trust. And for the young gentleman, I'm going to give you a good advice, tried and tested. Basically, partner with all the people. In JBQ Africa, I partnered with somebody who is literally the age of my father, right? They come with experience, and jackpot, they come with money, right? You come with the innovative way of structuring things and the rest. So that's the other thing people don't talk about, but it could be a very good win-win, right? So they have what you don't have, and you have what they don't have. Food for thought. Thank you.
Very quick, Jonas. But
no, I just love what he said. Like, I created an association like 3 years ago in Norway called 50 to 100. The whole principle of it was to take people 50 plus. Like, we have hundreds of members. Most of them are in their 60s and 70s, and we connect them with young entrepreneurs. And what happens is exactly what he says. They get both the competence and resources. So, like, yeah, don't underestimate, you know, trading up a little bit in generations and then seeing, yeah, I think it's so underestimated.
Thanks. Let's go with Halima. Maybe you want to...
Thank you. Starting with the first question of Killian, I think, about the process. Actually, I'm aligned with Jonas because I think network is really key. If I take the perspective of France, at least, we have many diaspora associations. So this is really a good channel to engage with diaspora people and to mobilize them in that perspective. And thanks also to technology, we have social media. For Chihuahua, basically, we perform a market study on social media, to name it, for LinkedIn. And we collect about maybe 1,000 interests from diaspora people about investment. So I think there is currently a really good dynamic toward Africa in terms of investment. People are really interested in engaging in Africa. They want to know what you can propose them to be part of the journey, as I said earlier. So this is the channel that we usually use for Chihuahua. And most of the time, we also organize some event together with diaspora people to present our model and the product that we hope they will join us for investments. These are some of the process that we use to engage with the diaspora population. And maybe for the youth question, I will say, honestly, education, maybe be curious enough to go check. You have the chance to have a lot of social media who talk about entrepreneurship, acceleration of projects, and you have many, many examples where you can rely in order to strengthen maybe if you have a project, your business model. This is really important, I think. And also mentorship, as Jonas said earlier. I have many, many young people from university who rely on mentorship today. I think this is also a good occasion to maybe grow your understanding of business model, entrepreneurship, because no one gonna give you his money if you don't show that you have the ability to manage and also the understanding of what is to manage a company. So this is what I will advise. Thank you.
Thank you, Halima. I see Mauro on my right, so I will ask Siddiqui to be short.
Yeah, I will be very short. I mean, about the identification of diaspora, I think it's all been said. And about your question, as I'm a youth too, so I'm listening to their advice. Thank you.
And thank you very much for this, for having been there with us for this too long panel. I hope you enjoy and see you very soon at the cocktail, I think. Mauro, I give you the floor.